and welcome to this leadership series on the global transaction banking landscape. I'm John Beck, the Banker's Trading and Technology Editor, and I'm joined today by a panel of industry experts to talk about the challenges, issues and opportunities faced by transaction bankers today. I'll let the panel introduce themselves.
Hello, my name's Harry Newman and I work for Swift. I'm responsible for all of our market initiatives in Europe, Middle East and Africa.
I'm Peter Bevan, I'm a partner with Linklaters, a law firm based in London advising on financial regulation.
Hi, my name's Kevin Brown. I'm Head of Global Product Management for the GTS division of the Royal Bank of Scotland.
Hi, I'm Jerry Norton of Logica. I look after the banking side of Logica's business in the UK. I also sit on the Global Financial Services Board, which governs all our business in financial services.
Hello, I'm Julian Wakem. I'm a partner at PricewaterhouseCoopers, and I'm the lead partner on their transaction banking practice.
So, transaction banking star has obviously been very much on the rise since the crisis, and the appeal of steady returns along with a stable, socially acceptable business model is fairly obvious, I think. But things haven't been plain sailing all the way, and particularly recently we've sort of harsh economic conditions, increasingly tough competition and more regulation than ever before. So, Kevin, if we start with you, I mean, how do things feel in the transaction banking world today? How optimistic are you?
It's interesting in the sense that I was asked a similar question at Cybos in Toronto, and my response was very much that it's a degree of practical optimism in the sense that transaction banking provides the heartbeat of all of the businesses and the countries in which we operate. Providing financing of trade, the making of payments, and the cash management, and providing the working capital to support our clients. And even through the market turmoil, those functions need to continue. People need to continue to be paid their salary. Trading needs to continue to happen, and the cycle of doing business needs to continue through. So I think it is one of those businesses within banking which is critical to the economy. We have a strong reliance on technology. And of course, in terms of how we take the business forward, I think when you look at the market environment, even through the earlier issues that we had back in 2008, the transaction banking continued to operate successfully and robustly through those very difficult times.
Sure. So, I mean, obviously the appeal of transaction banking is, as you say, kind of slow, steady, reliable returns. And that's one of the reasons why it remained successful through the crisis and beyond. But that's also a reason it's been increasingly popular recently. We've had sort of new market entrants, people ramping up operations. I mean, is there enough business to go around?
It has become a very attractive business. I know our CEO has often said that this is one of the most competitive businesses given its attractiveness. I think the critical element of this is how you work with your clients and you manage to support your clients through the development of their business, and that's through the good times and through the bad times. And I think the firms that are successful in terms of taking the business forward are those that are close to their clients through these difficult times. And yes, it is attractive, but this is a relationship business, and if you can build those strong relationships and you're there for your client, then you'll continue to be successful.
Okay. So, Julian, if I can move on to you, what's your take on the competitive landscape at the moment?
I think it's very interesting. It is a stable business, but the drivers of growth in that business, revenue growth in that business, are so linked to GDP growth and interest rates. Revenue growth of a business has been challenged. But the velocity and breadth of trade is making, or is allowing a number of banks to look at this as a business. So I think we're seeing a lot of local banks, possibly with regional ambitions, start focusing management teams on this for the first time. So banks that would have seen payments and cash management and even trade as a cost centre are beginning to really focus their management teams. That's banks Africa, Canada, Asia, Australia, are all beginning to form transaction banking businesses, and they're doing that because they can see that management focus allows them to genuinely grow that business and grow the franchise.
So do the entrance of these new smaller players lead to more opportunities in terms of actually working with some of the larger players, working alongside?
I think so. There are very few banks that can provide a total global solution. most banks will have to focus very clearly and define exactly what franchise they're going to serve and understand how they differentiate that franchise. And it may be the trading footprint of the customers they serve, it may be the risk appetite of those customers, or it may be even the sort of financial and operational sophistication of those customers. But they will have needs beyond the ability of that bank, and they will have to partner to provide that. But they will also have a competitive advantage to have real customer empathy and engagement with their local customer base.
And do you see, anyone else feel free to chip in here, but we've seen more alternative payment providers in recent years as well. I mean, how do they kind of play into this? Are they a genuine threat? Are they viable? Or?
Well, I think there are a number of alternative payment providers. I think the question is how much space is there in this industry for new players and profitable players? And the question, I think, for the new entrants is if they really try and be transaction banks, this is very Animal Farm, they will end up as big transaction banks and in exactly the same situation, and it will be simply a more or less a volume game. The smart ones, I suspect, will try to sort of take the client relationship and get somebody else to do all of that nasty banking stuff that it requires regulation and costs real money. And then sort of squat across the client relationship and manage that whilst not doing all of that clever stuff. Now, whether there's really room to do that is a good question.
So they'll be the front of house rather than the kitchen.
I think that's a really important point. I don't think many of those new entrants want to take on the responsibility for the entire value chain of a payment. It's difficult. There's a lot of complex regulation. It's difficult globally to run it. I think they're quite happy that banks do that piece. I agree very strongly with Harry. They're interested in something else. They're interested in capturing the customer, the customer experience, the value, or whatever those words. And I think they're quite happy to let the banks do it. So I don't think you'll find any new entrants really who are that bothered about doing the back end. I think they want to do the front end.
In developed markets?
Yes.
I think it's a bit different in emerging markets.
Yeah, no, that's true. So I think that's why it'll pan out myself.
I think what's very interesting is one of the problems that a lot of banks face in this business is the way the corporate treasurer judges them and judges the way they add value to their corporate is through price. And banks have a very price-based model for their transaction banking business, and the challenge, especially for these new entrants, is do I know the franchise, do I know my customers well enough, I can move to value-based pricing, because the transaction-based pricing that the industry as a whole in is not a nice game to be in.
And I think if you take that Kevin's point further and you say, well, okay, the fundamentals of transaction business are very strong. The volumes are there, they increase, and they will continue to increase because they're linked to real-world events, as in trade, as in making payments. The issue is, as you get more competitors, then you are going to get, as Julian says, you're going to get price pressure, and you're going to have to start looking at other ways of differentiation in that market. And I think that is one of the key issues that banks have to respond to.
A couple of you mentioned the complexity of regulation, and that is a barrier to entry, isn't it, as well, for those who are not established. And in the regulatory landscape for banks at the moment is a curious one, because we've still got the end of the facilitative regulations coming through, things like SEPA, about opening up markets and making life, in a sense, easier. And then that's still going on, and at the same time we've got more regulations coming in, which are making life more difficult. At the same time, the whole Basel III agenda, all the other looking up at breaking up of big global banking groups, which, as you said, is to some extent part of what you need to do this business. So we've got a bit of a battleground going on there, and pulling in different directions.
I think just picking up again on Julian's point, though, I think with some of the new regional entrants and national entrants, the focus is very strongly on starting with the client. So what they're looking to do is build out and support those clients. Those clients are trading internationally. They're looking for the services they can deliver for those clients. And I think that the landscape is changing. At the top end, we're also seeing, because of the market turmoil, much more focus on the rating of your counterparty, which is an issue that is now very much at the fore. But I think also coming back to the sort of new entrants, I think what we're seeing is a mix of things. We're seeing new entrants in different parts of the value chain, actually where in some instances banks aren't keen to go, and actually these provide added value services for clients that perhaps are not attractive for banks to develop from where they are today. And I think that's a good thing. That adds value to your client proposition. The challenge of banks is being able to pick and choose and partner with the right client, with the right service providers, and/or allow those service providers in the way that the market works to support those service providers in terms of what they need to do. And I think the point was well made in terms of Peter certainly with the European landscape and the introduction of the payment institution, that has changed the market in a certain way that hasn't changed elsewhere in the world. And I suspect we'll pick up on that later in the discussion, but that has brought in new entrants that have got some regulatory framework around them which gives comfort particularly to consumers.
Yes, that's right.
But do we want to, I think it would be actually useful if we drew that distinction between the corporate market and the retail market, because the new entrants in the two are quite different.
Yeah.
The corporate market, the new entrants are more like the sort of the e-invoicing players or in the supply chain or something like that, whereas in the retail market it's about people trying to have, for example, mobile phone companies trying to do mobile payments or whatever. It's quite different situation.
In the retail market, do you think there's more potential opposition with kind of traditional players, with the banks?
I think there's more room for diversity. I think it's less. The corporate market is a more hard-nosed market than the retail market. So I think that there's more opportunity for smart players in the retail market.
But I still think, as Kevin said, I think in that value chain in the retail market, many of those players don't want to be banks and they don't want to be transaction banks. Google's a good example. They state they don't want to be the bank. So I still think it's still there's a segregation along the value chain.
There's somewhere. An interesting question: how much you can own the customer relationship as the retail brand without becoming the bank? Actually, and so there will be a limit as to how far they can push that.
Go back. Yes.
But in many ways, that's I think the real challenge for this market space is: can the transaction banks use their relationship with the client and the fundamental transaction handling that they're doing, that everybody needs and is the heartbeat, to have that relationship with the client, or can somebody else, cherry pick as much as possible of that relationship and leave them with the nasty processing stuff, which maybe doesn't earn them much money. Going as we go forward, that's going to be
I would say in the corporate space, if you look at that, then I think it's a fantastic opportunity for transaction banks to assume more of the complexity as the regulation becomes more, as it's very difficult for people, particularly larger corporates or large other FIs, to actually get a view of this across multiple jurisdictions. The one entity who can manage that is the bank. They can manage that very well. You have the resources, you have the capability, the skills, the expertise. So actually packaging that as part of the offering is actually, I think, something very attractive, that I take on not just the transaction, but I take on everything that goes with it, and that actually becomes a very competitive offering.
The financial institution market is an interesting one, isn't it? Yeah. With sort of Kevin's comments about concerns over creditworthiness and so on. There's so much more collateral now going to have to be held in the financial institution marketplace. Who's going to hold that collateral? There's an obvious role there for transaction banks.
Yes, exactly. Subject to obviously various risk issuys, but I think sorry, Kevin. But I think that's exactly, and again, a non-bank or somebody else can't do that, or certainly won't be able to do that, or won't want to do that. And I think that's the point, isn't it?
Yeah. But it's interesting that the banks many of them will have to look at exactly what their strategy is and have a much more focused strategy around, potentially being a custodian, a collateral holder, and focusing on that processing element, or focusing on the franchise ownership element. But the universal cover-it-all strategy for transaction banking is probably one we're going to see get refined very quickly, I would think.
Certainly, speaking from a transaction bank perspective, our focus is very much on being able to provide the services that our clients need and want to do their business. Our view is, we've got a good footprint, but it's, from a transaction bank perspective in all of the key currencies and countries. But what we are still looking to do is to add to that proposition with the right partners and the right choices around those partners, whether that's a new entrant or whether that's an existing player in the market in a particular place where we don't operate. But the focus is ensuring that we've got the right proposition for our client franchise. And I think that's certainly where what I'm seeing other transaction banks focusing on as well, which is how can I support my clients where they do business.